We know that for many women investing can seem intimidating. With so many competing voices, conflicting advice and financial jargon, how do you even begin? Well, don't worry, we've got you covered. In this video, we want to help you get started on the basics of investing so you won't miss out on building your wealth. Getting started investing doesn't have to be difficult or complex. There are 3 terms that are important to understand when it comes to getting started with investing: assets, investments, and portfolio diversification. An asset is something of value that you own, such as a house, car, or even stocks and bonds. Investments are the act of using your money to purchase assets with the expectation that they will increase in value over time. Portfolio diversification is a strategy used to manage risk by investing in different types of investments and spreading out your portfolio across various asset classes. This way, if one type of investment doesn't do well, the other investments can help balance out the losses. In addition to understanding these 3 basic terms, it's also important to have an idea of what kind of investor you want to be. There are many different types of investors, such as passive investors, who prefer lower-risk investments with more modest returns, or active investors who look for higher returns through more aggressive investments. No matter what type of investor you are or how much money you have to invest, it's important to always remember that investing is not a get-rich-quick scheme, and it takes time for investments to grow. It's also important to note that there is no one-size-fits-all answer. What works for one person may not work for another. It's best to research different options and decide what makes the most sense for your individual financial situation. Investing can be a great way to increase your wealth over time as long as you do it responsibly. Now let's move on to the steps for beginning investors. Step 1. Assess your current financial situation. Take stock of your current finances and determine how much money you have available to invest. Also consider any short-term financial goals, such as saving for a down payment on a house or emergency fund, before making long-term investments. Step 2. Set investment goals. Decide what kind of return on investment you want from your investments over what period of time, e.g., 6%, 10%, 30% over 5 years. Setting clear expectations up front helps guide your investment decisions later on. Step 3. Investigate different investment options. Educate yourself about different types of investments, such as stocks, bonds, mutual funds, and index funds, so you can pick which type best fits your goals and risk tolerance level. Step 4. Start investing. Begin building an investment portfolio with the money that you have available to start now. No need to wait until you have a huge nest egg saved up. Step 5. Monitor performance regularly. Track progress by periodically reviewing performance metrics like return on investment, ROI, cost basis, what price was paid for each asset, and market volatility. How much does the value change? If needed, make adjustments based on evaluation results, i.e., buy more of one asset if outperforming another, or sell off underperforming assets altogether. Just remember, past performance does not guarantee future results. Step 6. Rebalance your portfolio. As markets fluctuate, your portfolio will become unbalanced with certain investments growing in value while others decrease. Regularly rebalancing means selling high-value investments and buying low-value ones to keep a balanced portfolio. Step 7. Investigate tax advantages. Research tax advantages that come with investing, such as capital gains taxes, dividends, and interest income. Understanding potential tax implications can help maximize your return on investment over time. Ready to get started? Download our free monthly budget worksheet today so that you can start planning out your investments right away. This guide will help you have a clear view of your financial situation and budget your monthly investments. If you found this video helpful, don't forget to like and subscribe, and stay tuned for more tips for investing and building your wealth.